What is up, YouTube fam? It is your friend Sam. Today we're going to talk about Fundrise. What is Fundrise? I hear you say. Fundrise is a private real estate investment service that, in their words, should provide higher returns than investment in publicly traded stocks. Now, they do look at this as an adjusted risk investment, of course, and they state that you could see as high as 12.3% annualized returns. Now, I know what some of you are thinking, and it's the same as what I was thinking. This sounds very much like a REIT, a real estate investment trust. Now, the difference here, however, is that a REIT is publicly traded on the stock exchange, whereas Fundrise is essentially a private investment that is publicly available, which means anybody, you, I, anyone can invest provided they meet the minimum requirements, which in this case is basically a minimum investment of $500. Now, based on that, one of the biggest immediate concerns is essentially the liquidity and accessibility of your funds. Now, because it's not publicly traded on the stock exchange, it does beg the question as to how easy and quick the process is going to be if you decide to sell your asset or your portion of the asset to get your money back, essentially. That is probably one of my biggest immediate concerns, but we will get more on that specifically later in the video. So let's look at their strategy a little bit and determine if we feel like they've got a solid grasp on real estate in general and where they're actually putting your hard-earned money. Now, according to their website, their focus is to really focus down on major demographic and key cultural shifts, ideally ahead of time, to capitalize on those over an extended period of time if they can get in early. So a good example of this that they state on their website is that they're looking at areas of development, right? So one area that they're looking at is investing in areas along the developing metro line in Los Angeles, which I believe is a very solid idea. Another good example of this could be, for example, if a new major sports stadium is arriving in a certain area, which we can intelligently expect down the line more dollars to come, more businesses to come, and therefore more demand for that area, which is likely to rise house prices and demand for the area proportionately. So, with the knowledge of a stadium or good metro lines, public transportation, etc., etc., coming into a certain area, being able to invest in that area early on is likely to see solid returns down the line. Now, this is a solid approach. It's something that I myself focus on whenever I'm investing personally in real estate. So I can't knock that strategy. More so, I commend the strategy. Now, according to their website, they even take that one step further. And this again is a strategy that I highly recommend to anyone that's just looking to invest in real estate in general anyway. It's not unknown knowledge that there is higher demand for more luxurious properties, renovated, refurbished properties, properties in good standing as opposed to rundown places or vacant land. Now, that goes without saying, so the strategy here that Fundrise express that when they invest into an area, they're then going to put more funds into developing those properties, developing that area, so that ultimately the real returns are likely to come when they actually sell and realize that property value once they've bought, invested, refurbished, improved, and then sold on. Again, to me, this makes perfect sense. I've been investing in real estate now for some 6 or 7 years, and I've definitely experienced exactly that. Whenever I've invested in a property and put a little bit of extra funds into developing, renovating and improving that property, the value of that property rises greatly compared to just general appreciation of that property over time, and it allows for much greater returns. Now, for us to really get a solid understanding of what's going on in Fundrise, what the process is, what's their communications like, we need to get some skin in the game. So for the purposes of getting skin in the game, we are going to take our wallet and we are going to take $5,000 and put it into Fundrise as somewhat of a test. Now, naturally, based on this, we're not going to know immediately what the results are, so I'll probably end up doing a follow-up video in 6, maybe even 12 months time to keep us posted and updated on how that investment is going. But for now, we'll get that money in there and see what the onboarding process is like, see what the initial communications is like, and get a real look under the hood. Okay, so we have just received this email. Your order is complete. Sam, your order is complete. Check out your investor dashboard to stay up to date on the activity and performance of your portfolio. Investment plan, balanced investing, order details, that's me, and we've put our $5,000 in. So when we go to our investor dashboard, bear in mind I did this a few weeks ago to get this ready, so we've already seen $5.86, ladies and gentlemen, since September 2019, which we are still currently in, albeit about to exit. So this is what the dashboard looks like. You can see it's pretty comprehensive. You go in and you can have a little look at your different projects here. They're all different ratings. This gives you the opportunity to upgrade. Here over on the right hand side, there's more graphical projects, breaks down all of the active projects that we're involved in, 81 different active projects. Your portfolio has acquired a new project. I'm going to get to that in a moment. This happened just a couple of days ago, and it's really cool. You can go in, you can click, you can find out what's going on, where your money is going, and what details of these new acquisitions and what's happening with those projects. It's kind of cool because you get the opportunity to be involved in a lot of different projects that otherwise, of course, you would never have had the opportunity to be involved in. It breaks down your historical account value, and there are tons and tons of different things we can do here by looking at all the different tabs and things available. So when they acquire a new property, they send me an email. Here's the one that I just received: new acquisition, land loan for Bay Area Master Plan Community. We can of course go into tons and tons of detail. Invested roughly $28 million, and this is the main thing to understand with companies such as Fundrise. They have access to huge amounts of money, i.e. us. We are the people that are providing this money. But it's cool because with that, they have access to those funds to be able to invest on a larger scale. And the whole purpose here, that by investing in larger scale development projects, the returns available are likely to be greater than what we might do if we were to put larger sums of money into smaller developments. At least that's the overall plan here. So let's look at some of the top lines here. We're looking at around about 12% expected returns based on what they say on their website. We're looking at 6.6 to 7.3% in dividends, with 1.9 to 3.1% expected appreciation. This is the general top lines that they express. Now, there are over 200 pages of fine print on the Fundrise website. Of course, it's always recommended to read that, but I appreciate not everyone will. Now, obviously, I'm trying to do some research here, so I've had a good look through those, and to break down some of the key areas that stand out to me, the main one is essentially what we alluded to at the beginning of this video: the liquidity and availability of your cash, of your investment, and how easy or difficult it might be for you to get that money back. Now, on the Fundrise website, in the fine print, it does talk to how when you wish to sell your, we'll say shares for the sake of understanding, but your portion of your investment, they cannot guarantee that that sale will go through. They will do their very best to make it go through, but there are no guarantees of this. Now, in their defense, essentially what happens with this is it's trying to avoid something along the lines of what happened in the 2008, 2009 panic selling. And so if you can imagine if everybody that was investing in Fundrise all of a sudden decided, actually, I'm going to sell. Now that's going to cause massive problems, not just for the company, but for everybody involved, because the value of the ownership, each of the assets, if you like, is going to drop significantly. And they may not even be able to fulfill those sell orders because they're having to sell the properties immediately before they would have realized their full potential of profit in order to fulfill the sell orders of us, the public, trying to get our money out. So it is a protective measure. And what I would say to that is that it's most likely that if your investments are quite small, like mine, $5,000, I imagine it's going to be a whole lot easier for them to fulfill that sale than if all of a sudden you're trying to sell millions and millions of dollars. So that's just something to bear in mind. And of course, what I would always say with real estate in general is, to me, it's a long-term investment anyway. Now, if you were to compare it to what we've talked about before, this S&P 500, a Vanguard index, for example, with lower annual fees, with good solid expected returns, 100+ years of history backing that sort of thing, then yes, maybe this wouldn't stack up as solid when you look at the availability of your investment, at least, as well. But what I would say, and for me, there is a real importance that should be emphasized on diversification of your investments and your assets. And to me, if I've got additional money that I want to invest, this is a great, fun, expressive way that I can get involved in some really cool different projects with the potential of some very high returns at a reasonably low risk when you look at real estate in general. And so when you balance those out, I personally, as you can tell where I've put my money where my mouth is, feel like I'm happy to take that risk of being able to get my money immediately, especially when we're talking about a smaller sum of money that I should be able to get back. Now, the next concern that was raised in the fine print and also on the website is obviously annual fees, which I just alluded to. Now, general annual fees for this is looking at about 1%. As discussed previously, there are comparable, better annual fee investment options in other things like the S&P that we just discussed. However, we also need to bear in mind that these annual fees could go up anywhere from 1% to 3%, depending as well on the purchases, acquisitions and sales that Fundrise make throughout your investment time. So that's just something to also be aware of. The very final thing to bear in mind with Fundrise is sustainability, and they do talk to this on their website again, where they acknowledge that these 12% and the different percentages that we've discussed previously of potential or expected returns may not be sustainable over a seriously long period of time. And so, granted, time will tell. The other thing that I'm also well aware of is that this organization doesn't have years and years and decades of history to back it. However, it is in real estate, and the strategies that they're implementing within the real estate industry and market are tried, tested, and have been proven, and in my opinion are very solid strategies moving forwards. We've talked to how the platform works and how you can be involved in some really great projects here, and they inform you about that, and you can get involved in that, and you can see what's going on with all of your stuff. Is this the best pound for pound, investment? Maybe not. That's up to you to decide based on what we've discussed. There's definitely cheaper options out there. There may be arguably higher return options out there, but as a general investment to get involved in real estate with some potential for some great high growth and high returns, I would say that Fundrise stacks pretty positively. And I'm actually quite excited to be a part of it, and I'm really looking forward to seeing how my investment develops over a period of time. And I'm definitely enjoying going through the dashboard and tweaking my my options to be involved in different projects as they come up as well. So that's all I've got to say on Fundrise right now. There will be a follow-up video, obviously, as my investment goes on, and I'll keep you guys updated. This is all just my opinion and my personal experience as I'm getting skin in the game. But I'll keep you updated. I hope this has at least been useful to inform you about the platform and let you know what the deal is and what the option is, so that you can make an informed decision on what you want to do. None of this is advice, this is purely for entertainment, but at the same time I'm just giving my opinion and my experiences, and hopefully you enjoy it. So with that said, please click the like button, please subscribe, check out some more of our videos, stay tuned, and I will catch you on the next one.